So I took this trade today, but I sold the shares. I took a 0.1% loss, 0.1% of my overall portfolio. So I took a tiny loss because the stock did not give me a clean entry. As you can see, high volume. Look at the upper shadow of this candle. Okay, very bearish. So this was not a clean entry, not a clean breakout. Although the price has closed above the first yellow line, which is good, which is positive, and the volume has closed above the blue line, which is again good, positive. But that upper shadow is a big concern for me. So let us look at this trade from the beginning. What were the characteristics I was looking for in this trade before I took this trade today? Okay. And I have sold all my shares. I have booked a small loss. Okay. So first condition, blue, green, red. The price is above the blue line, which is the 50-day simple moving average. The blue line is above the green line, which is the 150-day simple moving average. The green is above the red line, which is the 200-day simple moving average. So blue, green, red, that's our rule number one. Rule number two, minimum 10 candles in the base. So this is point one. So you start counting from here 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So easily minimum 10 candles in the base. Rule number three, minimum 4 points in the base. So this base has got 5 points. I will draw the points for you. So point one, point two, point three, point four, point five. 5 points in the base. So blue, green, red, minimum 4 points in the base. Wait, what happened? Yeah. Blue, green, red, 10 candles, minimum 4 points in the base. Okay. So basic conditions are satisfied, plus the latest candle closing is within 5% distance from the first yellow line. The first yellow line is point number 3. The second yellow line is 1% above the first yellow line. So when the price enters that band on the 15-minute chart, that is where I begin to buy my shares. Okay. My goal is to enter the stock when the price is in that band, because I might not get a precise execution price of 2280. Okay, that can only happen if I put a GTT order or an automatic buy order. But since I'm putting a market order, I need a band where I can buy the stock. So I cannot buy the stock if it exceeds the second yellow line. Okay, that's my maximum price that I can pay, and this is the minimum price I will pay. If the price is below this yellow line, I'm not buying. So above the yellow line, I'm not buying the stock. Below the yellow line, I am not buying the stock. So basically, the zone that I have established, if the price is above the zone, we don't buy. If the price is below the zone, we don't buy. And by the way, this is no stock recommendation or anything. Okay. So just I'm sharing with you what I have done. So now, if you see the latest candle, now the stock is beginning to maybe forming another base because it broke out of the base and came back. So it might form 10 candles again here. So I will wait for that. So this base has become invalid now because the price crossed this base. Okay, today. So now this is not point one. This is point one now, and it could either form a base or it could continue to go up. Now let me show you how I executed the trade. Okay, I made 2 attempts to buy the stock, and in both the attempts I lost money, and I will show you what happened there. So this is a kind of an entry which is very tricky. It's not easy to manage the trade. Okay. Now, before we go to the 15-minute chart, I want to show you why I was micromanaging this trade on the 15-minute chart. For that, you need to understand what I saw on MarketSmith before I came to TradingView. So let's go to MarketSmith so that I will give you some context regarding this stock. So I will sign in. So let's go to Radico. Once you get the context, then you will know which trade to micromanage and which trade you should give more room to fluctuate. Okay. Have a look at this stock. See, double digit growth in quarterly EPS, double digit growth in quarterly sales, and that too for multiple quarters. This almost 5 quarters. Okay. So fundamentals are good. The return on equity is 11%, which is okay, not great. The number of funds owning the stock has increased. The management ownership is not 50%. That's fine, no problem. Not a big deal. Up down volume ratio is 2.6, which is great. Master score is above 60, which is fantastic. EPS rating not great. Price strength is not great. Okay. Group rank is 60, which is not great. Institutional demand is there. Now, if you see group rank, you see 60 here. This company belongs to alcoholic beverages. So let's go to alcoholic beverages and see what is happening to the industry. Go to beverages, alcoholic. See, 6 months ago, the industry rank was 83. Now the industry rank is 60, which means the rank has improved. That is why I got interested in the stock. So the rank has improved. There is institutional demand. Price strength is decent, not great. We want this number to be more than 80. Okay, so these price strength is decent, institutional demand is there, group rank is improving, master score is good, and double digit growth in quarterly sales and earnings, and up down volume ratio of 2.6. Apart from that, if you see the relative strength line, it is climbing, and you see these blue dots represent the 52-week high of the relative strength line, which is very good. So whenever you see a blue dot inside the base, that's a very positive sign. So in this stock, if you notice, there are more positives than there are negatives. So I decided to put the stock on my watch list, but I decided that I'm going to micromanage the trade because of relative strength. If this number would have been 88 or 91 or 92, then I would not have micromanaged the trade. I would have given it more time. If this number was less than 40, I would probably not have micromanaged the trade. I would have given it more time to fluctuate. Okay. So you see how I am looking at a particular stock based on the characteristics it is displaying. As a professional trader, you should know uh, how much time you should give to a stock on the breakout day. If a stock is displaying good relative strength, good technical strength, good fundamental strength, I will give it some time. Okay, on the breakout day. Probably I will hold it till the end of the day. However, if the stock is showing weakness in one of the areas, like price strength is not very great, group rank is not very great, when there are some uh, gaps, or if the stock doesn't match our leadership profile, uh, or the profile of a stock which is a true growth stock, if the parameters don't match that, then we need to micromanage the trade because we are getting into a high risk situation. Okay, the positive factors here reduce the risk in this operation, but still we have to micromanage the trade. So now you get the context. Why did I choose to micromanage the trade on the 15-minute chart? Okay, this is very important. Micromanaging means you buy a stock when it crosses the yellow line and you watch the movement of the stock. If it is going in your favor with high volume, fine, you stay. But if it drops again back below the yellow zone, that zone which I have established, if it drops below that yellow zone, you immediately take an exit because the stock could collapse. Okay, because there are some weaknesses that we see here. The stock is vulnerable. Okay, so I made two attempts, and in both the attempts, I ended up exiting the stock. Okay, so let's go to the 15-minute chart. So this is the first candle. Okay, so let's look at this 15-minute chart. What happened? So first candle of the day, it did not touch the yellow line, so I did not do anything. Second candle of the day, I decided that I am going to wait till the close. Now, why did I decide to wait till the close? Why did I not buy the stock when it touched and it traded one tick above the first yellow line? I should have bought the stock, right? When it touched the yellow line on high volume. See, you see high volume here above the 50 period simple moving average. This is not the 50-day simple moving average. This is the 50 period simple moving average because we are on the 15-minute chart. So the moment the price touched this, I should have bought, right? But I did not do that because from market smith analysis, I knew that I need to be cautious with this stock. So I gave it time to close above the yellow line. And as you can see, the yellow line is 2280. The closing price of this stock is 2281.402. So 1.4 rupees closed above the yellow line. That gave me the confidence to buy the stock. However, you look at this candle carefully. 90% of the height of the candle is below the yellow line. So I was still nervous while buying the stock. This is not what we want to see. Okay. We want majority of the height of the candle to be above the yellow line, not below the yellow line. Moreover, we don't want any upper shadows like this. Okay. So I took an entry here. I waited for the next candle to close above the yellow line. But the moment it dropped one tick below the yellow line, I sold my stock. So it booked a very, very tiny loss here. Okay. Hardly 2 or 3 rupees here and there. So since it did not give me a clean entry, I was out. But then I again set an alert on the stock near this yellow line. Okay. And I got alerted here. Now, on this candle, when it broke above the yellow line, I should have bought the stock, right? It closed above the yellow line. Why did I not buy? This is because of some basics of intraday trading. If you know the basics of intraday trading, you will understand that the first 1 hour of the day, the high created in the first 1 hour of the day is an extremely important price point. So the high of the first 1 hour is this. So since this is a 15-minute chart, the first four candles constitute the 1 hour period. Now the high of the 1 hour period is this, and this candle did not close above that. Okay. So on this candle, I did not buy the stock. So there is a logical reason for not buying the stock. Okay. Intraday, when I'm buying a stock, preferably I want it to close above that 1 hour high if I'm buying it late. Okay. Because that 1 hour high tends to become resistance. So I did not buy here. But have a look at this candle. This candle definitely closes above the 1 hour high. So the 1 hour high is 2298.90. You look here, 2298.90, and the close of this candle is 2302. Okay. So while this candle was while this candle was active, I did not wait for the close. The moment the price touched this high, I immediately bought the stock. So I got a execution price of 2294.35 something. So my execution price was 2294.35, which is below 2302, which means I ended up buying the stock inside this yellow zone. That is very important. Okay. So I did not buy it extended. So I did not wait for the close of this candle. That much judgment you can have as you become more experienced while executing the trade. You can use that judgment. You can understand that, okay, the price is most likely to close very strong because there is high volume coming in, above average volume coming in. Then you see two candles, very nice follow through, made money here. But the moment I saw this candle, I became nervous because, it's like a shooting star, upper high volume, weak closing. Okay. This is the highest volume of the day, and the candle is closing below the midpoint of that candle. If the closing is below the midpoint of the candle, that is called as weak closing. And especially when you get a weak closing on high volume, that is a signal of that signals supply, that doesn't signal demand. But still, I did not sell the stock here because the price had came out of the base. So when the price comes out of the base, the base itself, this line, the top level of the green zone, that line tends to become resistance. Okay, sorry, support. Earlier it was resistance, but now it tends to become support. So I waited for the next candle because I had a good cushion. My buying price was below this yellow line and the price was here. So I had good cushion. So I waited, and then came the collapse. Okay. So if you assume that the price will continue to go up after you bought, you are wrong. You have to listen to the market. Okay. Your assumption here is that the price will touch the green zone and bounce from here. That is my assumption. But assumptions are dangerous in the market. I have to see what the market is doing. Okay. I don't have to go by assumptions. I have to go by what I see on the chart. So when this red candle began to develop, okay, the moment it touched this yellow line and came dropped below that yellow line, I sold. Okay. So it's almost near break even or just below break even. I ended up selling the stock just like I sold here. And you know why I micromanaged the trade? Because the parameters on MarketSmith were not great, where they were not ideal as we see for a true growth stock. If the relative strength of this stock was stronger, we would have given it more time. Okay. And this candle is proof, it is evidence that there is inherent weakness inside the stock, at least on an intraday basis. If the stock falls 3.17% in 15 minutes, okay, you look at this number. If the stock falls 3.17% in 15 minutes, okay, that's a big red flag. Okay. So I did not bother being in the stock during this period. I just exited here. I did my best to exit from the stock above my break even price, okay, which was 2294. But there is always some slippage when you sell the stock. So combine this loss with this loss, I ended up with 0.1% loss on a portfolio level, which is negligible. Okay. So that is how I managed my risk. One more point I wanted to share with you. This is very critical. Okay. You look at this stock was bouncing. It would go down, it would bounce. It could go down, it would bounce. See, there was volatility in the stock. There was no tight price action here. So obviously that was another sign that I need to micromanage the trade. If this price action was tight, then probably the stock would have shot up. More importantly, if you notice, on this day, the stock went up 2.5%. So on 23rd October, the stock went up 2.5%. But the Nifty on 23rd October, it went down 0.15%. So imagine a stock which goes up 2.5% in a day on a day when the index is down 0.15%. That's a relative strength. Okay. See, 22nd October, the index was down 1.25. And 22nd of October, let's see what happened to Radico. Okay. It was down 0.63%. So the market is down 1.25%, but the stock is only down 0.63%. That is again a sign of strength. Okay. So, and that happened on multiple days. So I was watching the stock very closely, combining the closing percentage or comparing the closing percentage of this stock with the Nifty. I noticed that when Nifty would fall, the stock would not fall too much. And when the Nifty would rise, the stock would rise by a bigger amount. Or if the Nifty would fall, sometimes the stock would actually go up. That is a sign of a relative strength. That is why you see that blue dot on MarketSmith, which indicates a relative strength. Relative strength means strength relative to the general market index, which in this case is the Nifty. So although there was volatility, still I took a position in the stock because it was showing strength. So whenever a stock is showing strength in a weak market, I am interested, but I also want a clean entry. Now as you can see, I did not get a clean entry. Not here, not here. The entry was clean, but the follow through was not there. I will show you now an example of clean entry. Okay. A stock that I missed, Newgen, if you remember, I was having my breakfast and I missed that stock. Look at this entry. Okay. Look at this base, these two yellow lines. Let's go to 13th of September, 15-minute chart. So I'll go to 13th of September. Yeah, look at this is the first candle, this is the second candle. So this second candle pierces the yellow line. So you buy on this candle, but you sell on the same candle because it drops back below the yellow line and the volume is not that great. It's only twice the average daily volume, volume, the average 50 period volume. But have a look at this stock. This stock is giving you volume which is multiple times the average volume on the 15-minute chart. Plus, it is closing comprehensively above the yellow line. Plus, it doesn't have upper shadow, which is a good sign. So the stock was above the yellow line, at least for 7 minutes out of these 15 minutes. Then this candle, this is a 15-minute candle. So 15 minutes plus 7 minutes. So roughly 22 minutes. So the stock gave you a 22-minute window in which you could have bought the stock. Okay. 22 minutes is enough time for you to take an entry into the stock and just ride this trend. You look at the follow through: one, two, three, small, big, and bigger candle. Okay, that's called follow through. And the closing was strong. It never came back into the yellow zone. So this is called as clean entry, where the stock gives you a small window. Now, in that window, if you are having breakfast like me, okay, then that's a disaster. You missed the stock. So I missed this. But you compare this entry with the entry that we got in Radico Khaitan. Radico Khaitan was more volatile entry than this entry. So that's the difference between clean entry and tricky entry. We need to be able to manage the difference between clean entries and tricky entries. We need to be able to uh, do both. Tricky entries normally consume a lot of your time, effort, and energy. So if a stock is causing you trouble at the yellow zone, okay, that's not a true breakout. The chances are very low that the stock will break out and continue to go up over many days. But a stock like NewGen, which gives you a clean entry, look at the follow through, not just on the 15-minute. It gives you follow through on other time frames as well. Okay. Wait. See, once it goes up, it still continues to be above the yellow line after so many days. 13 September. I'm recording this video in October. Okay, 20. So almost more than a month. The price has never came back to the yellow line. So that's called as follow through. And this day was a very good day opportunity to sell the stock for a uh, big gain, or selling the stock into strength. Because as you can see, this day registered the highest volume in recent period. I think for ever since 2024 started, this day was the highest volume day for this stock in this particular calendar year. So it took 9 months to register a very high volume day. Okay. So this candle was an opportunity to sell the stock on strength for a sizable gain. So you see the difference between a clean entry and a tricky entry. If you are taking a loss on a tricky entry, make sure your loss is small, like 0.1%. Okay. So that is what I wanted to teach in this video. I hope this video has added value to your trading journey. Please, as usual, like, comment, and share this video so that this reaches those people who genuinely want to become professional traders. Thank you so much.